There are so many mixed news articles and signals these days that it's really hard to know what's really going to happen in real estate. But I'm going to try to lay it out here for you, where we've been, where we are, and where we're headed. I encourage you to watch this video to the end so you can have a better idea of what's going on in the housing market and can best make your decisions moving forward in the future. So here we go. The last few years have been an unprecedented period in real estate, one with uncertainty, challenges, and a real estate market that was anything but average, which is why many are now referring it to the unicorn years period. July of last year, we were in the zenith of the market with home sale prices and buyer demand at the highest peak we may have ever seen. However, this changed as interest rates increased throughout the later part of the year and into this year. We've seen interest rates cross the 7% mark several times. For many participants in the market, there is a lingering uncertainty, concern, and perhaps sometimes confusion, especially as headlines spent the better part of last year calling for a housing recession, an economic downturn, or a decline in prices. So here's the good news. We've been seeing the market normalize or balance out much more lately this year. We're seeing it in the prices and the seasonality of the market. So by and large, we're seeing prices rebound in this new market, but there is a reality check, and it's the tight supply of homes for sale. Current supply being roughly half the level of 2019. Less people are selling, and it's just not quite enough to keep up with the buyer demand. Many homeowners are tied to their lower interest rates they would have to give up if they were to move to a new home, and as a result, we have a low supply. And we've seen areas and some prices rise again. But this should offer a lot of confidence to homeowners who might have been reluctant to move forward out of fear that they might have missed out on last year's peak. Showing activity and mortgage applications have been up in the last few weeks, and this shows that buyers are active in the market as the housing market normalizes. So what's the other good news? The average American's FICO score is the highest level it's been, and it's been that way for 2 years. We're seeing a rise in new construction projects, which give more people options for buying homes. Here's a few reasons why experts say this market is not like 2008. 39% of homes in the U.S. are owned free and clear. 29% of homeowners have over 80% of equity or more in their homes. The average days on the market that a home sits is coming back down. And did you know there's also 300 million households in the U.S. that make over $150,000 or more and are still renting? I've also heard interest rates could continue to rise this year, and banking experts predict they might come down later this year or next year. The problem is when they come down, it will likely drive prices up farther, creating more affordability issues. And that's why they say it's best to marry the house and date the rate. Buy the house with the long term in mind, knowing that rates will change. If you agree with these predictions, then waiting may be a bad idea. I don't invite anyone to rush into anything or do something in a situation they're not prepared for, but I do think those looking for a home over this next year will be in better shape by starting the process sooner than later to avoid higher prices in the future. I hope this all helps you make some confident decisions moving forward. Please let me know if there's any way I can be of service to you for your real estate needs. Phil Williams at RE/MAX Center Realty. Thanks for watching.